G'day there, welcome to the Closing Bell on the 15th of October. Today I'm just going to have a look at the S&P after that huge reversal we saw last night. For me, I'm recording this on the Friday, the 14th. A 5% range in the S&P 500 after the CPI figure. Markets got bashed, really broke through that level that I was talking about, very important level. Lots of stoppies going off, market down 100 points when I went to bed the previous night, and woke up and it had been a 5% range and closing on its highs. This is really how these false breaks of lows occur, which can ignite a bit of a rally. So there is a chance that we could be in for a bit of a squeeze to the upside. And so I just want to take you through how things are looking. And I think it's still pretty early days. This is only for short-term traders. You'd be getting a little bit excited. Long-term investors still need to wait, in my view, for a bit more information before you get too excited. But let's just have a look at what happened on last night's trading, so you can get a sense of, quite how interesting it was, the move that we saw. You'll remember I've been just following along with this market, watching the way that prices evolve. We know we've got this downtrend in play at the moment. And, if I was to look at a sort of a parallel view of that, it'll be something like this. So we do have this sort of strong downtrend taking shape. But what happened last night, there was a chance. I've been saying, look, that one of these days we're going to break through a low and it's just going to plummet. And that still could be what we've got in our future. But I've been saying you don't want to be entering trades near the low, because often you get the false breaks, and you've got to be aware that this is how markets move, where you have a new low created, where everyone who's buying stocks in here thinking they might go up, short-term traders are going to have their stop loss below the low. So there'll be lots of stoppies lined up below the market, and when they go off, the market will have a quick sharp move to the downside. But then if that's it, all of a sudden it will have a false break of the low and the squeeze will be on. And this is pretty much what happens all the way along. When you understand this is what prices do, you're not so surprised by the fact that you break through, stop everyone out, and then you have a mean reversion move. Break the low, big rally, break the low, false break again, break the low, false break. This is just how prices move. And, it may be setting itself up for another one. So the situation here after last night, the CPI figures came out very hot. And tell you what, the bonds haven't rallied. So, we've got a rally in stocks, but the bonds haven't followed through. The 10 years are still trading at 3.95%, and 4% was, around the highest level. So it's very close to still breaking out to the upside, those bonds, which would put pressure on stocks. So I'm taking this rally with a grain of salt, but I just want to show you, because it's stopped everyone out and then had a big reversal, which is then closed above that major low from June, that is sort of setting itself up as a false break. So the way you look at this is, if prices head below that low from last night, watch out. So, if you were bullish, you're a buyer on the false break, but you would stop out below that low from last night, below 3,500, because below there, it really can plummet, I assure you. And if stocks do happen to just turn straight back down now, even tonight, maybe last night on Friday, what did they do? I don't know. If prices carried on from that buying and we got another nice up night, and you would know more than me what happened, that would be the daily buy pivot and would really confirm that false break of the low. And you're probably going to see a mean reversion move, even back to the 200-day moving average there. It doesn't mean it's not going to then turn down the track, but I'm just showing you short term how to see markets, how these fulcrums happen, how the false breaks occur, the mean reversion. This is what confuses and makes people lose money. So I'm just showing you my methodology of how I sort of analyze these markets and understand how traders are positioned, where their stop losses are, how the false breaks occur, where you get the mean reversion, how you can take advantage of that to enter positions and take profits when you have the mean reversion move to create a free option for yourself. That's really all I'm trying to do with these videos, is to give you a sense of how markets behave so you're not fooled by them. So that really is the situation here. Is this going to be a false break of this low? The daily buy pivot, the move to the upside, this definitely could be on the cards. But you are respecting the fact that the long-term trend is down, and you're looking at that trend line there. You're saying, right, there's going to be lots of resistance up there, and prices could still turn down and continue this downtrend. So, for now, it's definitely a time when you could get a bit of a squeeze. Markets, when they get oversold, everyone's facing the same way. Everyone's bearish. People think it just can never go up. That's often a time when you'll get that bear market rally ignited. So I'm definitely open to anything happening here. I don't really have too much of a concrete view one way or the other, quite frankly. I just want to get a bit more information in on what the market wants to do here, and I'll be happy to jump on a bit of a rally if it's going to get going, because, devil's advocate, I mean, it could be the beginning of a rally to the upside. Maybe the Fed changes their tune. Inflation starts to come off from here. So you never know. These are the sort of the spots where rallies can start from. So yeah, open to whatever comes here. But tell you what, if that rally was a bit of a knee-jerk reaction and it turns straight back down, yeah, run away. Do not hang around too long, because the way everything else is looking, the bonds in Europe, here, UK, US, still knocking at that 4% level, it can still all turn pretty bad pretty quickly. So you want to be pretty nimble out there. So that's really the most interesting thing going on, is that huge move in the US is at the start of a bit of a bear market rally. I think it could be getting pretty interesting for the short-term traders out there. So get your ears pricked up, start looking at the stocks that you're interested in having a go at. If this thing does keep rallying, could be a nice tradable rally that we're about to see. All right, well, that's enough. Maybe didn't add too much value this week because I just don't know what it's going to do from here. I've got my lines in the sand where I'll start to get a bit more bullish or bearish. And often that's all you can do, and just observe the market and let it tell you what it wants to do. All right, well, I'll come back with more next week. Cheers.